Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to talk about tightening lending requirements and the environment in the cannabis industry, along with increasing amounts of mergers and acquisitions. On the line with us is Katrina Glogowski. She is an attorney and angel investor. Thanks for being back on the podcast.
Good morning, Josh.
All right, so we've kind of already seen a lot of lending restrictions and requirements on top of an already difficult environment for financing, and yet funding opportunities for cannabis firms exist, but investors are increasingly unlikely to lend if cannabis companies can't meet their revenues and profitability targets, according to this MJ Business article. So therefore, cannabis businesses are trying to find a way to move forward under increasing pressure to cut costs and make money or face a fallout. So we've already talked about M&A deals that have either been negotiated or canceled amid declining stock prices. Some executive shakeups have occurred, hundreds of layoffs resulting in 20 to 50%, both in the US and Canada, and stock market conditions continuing to press companies to reformulate their growth, spending, and acquisition plans, and to pivot from an unfettered growth to more judicious deployment of capital and focus on the path to profit.
I see this here in the Pacific Northwest pretty severely. I've been tracking Canada, and Canada has a legal stock market, public stock exchange, highly regulated, and they're struggling. They're struggling. Some of these large corporations that are just buying their way out of problems are now having their underbelly exposed to some of these overspends. And in Canada, it's been a real problem.
A lot of that has just been either a bunch of LOI companies that have, memorandums of understanding or a letter of intent with somebody, and they will give them 7-8 figures worth of paper. I'm talking about stock options here. When the value is zero, there isn't a lot of revenue. We saw, Bruce from Canopy Growth get fired because he was great at putting these deals together, but didn't generate revenue. And that's a lot of kind of what we're seeing, on the West Coast. I'm seeing companies just give up their production license in order to get maybe 6% royalty if that producer can even get anything. There's $1 million investments that haven't produced a gram, and then now 6.5 years oversupply in Oregon. A lot of people just jumped ship and went straight to hemp, and then yet we're still going to see 600,000 pounds come out of the ground in California, and that's going to suppress the prices even more. So I don't think anybody's getting away with anything, whether it's hemp or cannabis, whether it's in Washington or Denver or Toronto. It doesn't really matter. Everyone's getting hammered right now.
I agree. And it's the mom and pops and corporate entities that decided to play with cannabis as well. So it's not one particular area of the market. It's the whole market.
Right. So we just mentioned that Canopy Growth CEO got fired. New York-based alcohol giant Constellation Brands was a 38% shareholder in Canopy. They had to write off, I think, $50 million recently. They put in $4.5 billion, I think, with the anticipation of having an infused drink or infused beer or something to that extent. So since then, the industry has seen a failed M&A deals amid the changed market conditions and other previously announced deals that were being negotiated among a poor outlook for stock prices in the industry. You've seen layoffs involving several well-known firms, including Canadian-based producer Hexco, California-based companies Pax Labs, Weed Maps, handful of others. So there's data that's supporting slowdowns. So capital investment in the industry for 2019 hit almost $10.5 billion, 40% increase from last year. And so now it's running on what analysts would say is a more normal pace of growth. There's less money for October, and the number of completed deals is also slowing down, but maybe that's just all amounts to a more normalized industry.
I think so, but I do agree that the big mega deals are primarily focused on acquisition at this point, taking over someone who's failing.
Definitely, we're going to see a lot of that. There's a farm here in Washington, a family of people that are buying up farms, for $0 down and 6% royalties. But I think that the wave of consolidation and eventually capitulation, which is just, people finally realizing that they're not going to survive and that they need to work together with their community. So whether it's big corporates coming in and consolidating, or individuals coming up underneath and having a co-op model, I think we're going to start to see that come from both sides and really squeeze the market as the commoditization of cannabis comes into play, and this second wave from early entrance into consolidation and then back to expansion. That's just a normal wave of business cycles. And so the story of mergers and acquisitions is a similar one. There's 2 deals completed during the week ended November 1st. So that slowdown in activity could indicate a sign of growing maturity for the cannabis industry. Investors are being more judicious, pressing companies to focus on profitability is actually a sign of health, rational capital markets.
There's nothing super secret special about cannabis. It's a business. Your business had better make money.
And they will, especially with the point you made before about big pharma, big alcohol, big tobacco, continue to eye the space, looking at opportunities. That $4.5 billion deal from Constellation Brands, parent company for Modelo and Corona. That's just one wave. We've seen Philip Morris's company Altria go in and buy Juul and then come in with Hexco. So it's just the very beginning. Right? I did a report on Coors earlier that talked about how they're doing coffee, alcoholic coffee, and infused wine with something, looking at a bunch of different beverages, tea and everything else. And so they definitely talked about cannabis in that article. And so I think as everyone else's sales are starting to dip, they're going to kind of look for that new thing. And it might be CBD, acai berries, and these other kind of trends is maybe what they're picking up on. But I believe that long term, it's going to be more of like sugar, which is in everything, or nutritional supplements. It's going to be something that's going to stick around long term. Maybe that fad is just absorbed, and people don't really look at it like it's a novelty. You can kind of see that in CBD through Google inquiries, is it's kind of reached its peak last year as it's been more normalized. I guess maybe that's the trend here, is normalization.
Including normalization of the market, not just the product.
Right. The way investors are looking at it from a less speculative standpoint, hopefully looking at it through the traditional lens. Now they're looking at it through valuation. I think that's just a separate form of speculation, but hopefully value investors will be looking at cannabis companies through both technical and fundamentals, rather than just, oh, they're available on a stock market, I'm going to buy them.
Agree.
So for now, the industry is beset by the cooler outlook, and companies are going to have to navigate a trickier period of low stock prices and difficulty getting funds if they're going to continue to thrive. Some companies just threw too fast, too quickly, and could result in a period of reckoning. We've seen these massive valuations for a handful of early movers, only to see them go through the IPO process and not perform as well as expected to justify that large valuation. Cannabis companies also need to be aware of a potential economic slowdown in the not too distant future, which could make the current environment even more challenging. Cannabis companies need to understand that landing investment may tighten up or even become far more difficult than it is now. And I would not warn that, but I would definitely count on that, because again, the banks are going through a really stressful time right now. So the repo markets, the interbank overnight lending, is getting out of hand to the point where they're used to really, really small interest rates that jump to almost 10. Now the federal government is printing to the tune of $45 to $75 billion every single day. There's been bank failures. Nobody's talking about it. But I assure you, if the regular market, if the regular economy is starting to flounder, you can bet that the cannabis industry is going to be hit hard. Now, with that is going to come consolidation, but again, opportunities, because sin stocks, right? The vices will go up, but not many of these companies will live to tell the tale. 98%, in my opinion, of CBD companies will fail. Those that will survive will have to be in Puerto Rico to take advantage of that 4% corporate tax cap. But investors are going to lose, companies are going to lose, massive consolidation, capitulation, and a day of reckoning for a new opportunity, when there isn't speculation but cognitive dissonance, when you can rub brain cells together and come up with your own thought of whether this company is good or bad, and not just speculation and hype.
I have two comments in response to that, Josh. First of all, cannabis is an agricultural product. There is nothing new about growing, manufacturing, selling agricultural products. I do believe that cannabis and hemp will be on the commodities market eventually, hopefully sooner rather than later. But again, you don't grow bananas in New York City. You don't grow avocados in Seattle. There's a reason for it. So when you are making a long-term play, think about the existing patterns in the agricultural market. It's just not a good idea. And if when those types of opportunities come your way, be very careful. Do your due diligence. Look at the financials. Look at the plans that this business has. Hey, I am going to grow cannabis in the Yukon Territory on the south slope of this mountain because the air is clean and fresh. Dude, it snows 9 months out of the year in the Yukon Territory, and cannabis takes 6 months to grow. Come on, just think about these things and don't do stupid money deals like Yukon Territory outdoor grow. It's just not the best idea.
Yeah, and I'll throw Jamaica out there too. People are going to the Caribbean where it's salty water and hurricanes, and you're not even utilizing Act 20 of Puerto Rico with a 4% corporate tax cap. You're going into a foreign country, and it blows my mind. These people aren't even thinking long term. It's throwing money into the wind, and they're going to lose.
Yeah.
So especially when Brazil has 124,000 hectares of hemp, and California is going to pull out 600,000 pounds, and you think that you're going to be in Tennessee with a $300,000 budget, forget about it. So maybe that's not the best way to end the podcast. Is there some opportunities? Is there some way that that investors or entrepreneurs can learn and benefit from this potential debacle?
I think that there are opportunities. There are businesses out there that have value. Just do your due diligence and pay attention. Now, the way to look at this is and analyze the business, of course, but also cannabis is an agricultural market. This isn't new. Uh, yes, cannabis as a product is new, but the agricultural market, the agricultural trends, the consolidation, the normalization is not new. So become educated yourself. And then when you look at what I call stupid money, people just throwing money at something without paying attention, without understanding, ask yourself a simple question. If somebody came to you and said, hey, give me $1 billion because I'm going to make pizza. Pizza is a highly competitive industry. What's different about your pizza? Maybe you have something that's different. How are you going to enter these markets? What are the regulatory framework for you to sell pizza? How are you going to get the pizza to the customer? Does your location where you're going to sell this pizza have parking? What is the wage base for where you're going to sell this pizza? And sometimes I think if people would just take a step back, investors, corporate investors, private investors, analysts, if they would just take a step back and say, would I write a check if this was about pizza instead of cannabis? I think you'd have a lot more consistent results. But ultimately, the normalization is going to occur. And that, honestly, Josh, what I see today is what's going on. You're seeing normalization that is expected. And if your folks, if your team, if your analysts, your accountants, your lawyers, your marketing people don't understand that this is normalization, I would ask a few questions about that as well.
Yeah, that's a good analogy too with pizza. I had a friend of mine who just got out of the franchise, sold it, got rid of it because of the competition, right? Your labor is your most expensive. You're supposed to deliver it. You're supposed to advertise, do all those normal things. And yet it has all of these commodities that you throw together and then you sell this finished product. And with the competition like Domino's dropping the price to $7 or something, and then Little Caesars jumping on board with that too. Um, I don't know how they're going to compete, right? I like the idea that Little Caesars has an app now and you can go and pick it up in this little locker thing so that they're getting your data and it's hands free in a sense where you don't have that. It's already paid for and they just come and get it at their own time. That is something that the cannabis industry can learn from vending machines and automation, from a low price commodity. But in the long term, you got to stop looking at it like it's this novelty thing. It's just a commodity like anything else.
Yeah. And the pizza companies are definitely focusing on cost of goods sold. So when you're growing your cannabis, you have to control that cost. Is that Puerto Rico or is that an outdoor grow in the mountainous region of snow in the Yukon Territory?
Mm-hmm.
Think about it.
Definitely. There's a lot to think about. You're going to have to marinate on it. Come back to the Talking Hedge for some more clarification. I want to thank my guest, Katrina Glogowski. She is an attorney. She's an angel investor. Appreciate you being back on the podcast.
Thanks, Josh.
So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.